The way the earnings work, the analysts will wait to cut their estimates after companies report, and the majority of companies are going to report in late January and early February their fourth quarter results. The market's going to act way ahead of that, and that 8% expected growth that you talk about for 2019, the market's pricing in flat growth right now, or maybe even negative growth. So the analysts are going to wait for the next couple of weeks, but the market's not going to wait for them.
How much of it is China? How much of it is oil?
Oh, great question. China is certainly a slowdown, but also Europe's slowing as well. So when FedEx reported last month, it didn't blame China, it blamed Europe. So there's less charitable central banks around the world. The ECB's ended its QE last year, and we're seeing growth slowing in Europe and China. So it's across the world slowing growth. So that's a contributing factor. And also the Fed is tightening the screws a little too much here in the U.S.
We talked about trying to draw a contrasting line between a economic recession and an earnings recession. Are you expecting an earnings recession?
No, well, it's all going to be set on what the policies makers do. So some of this is self-inflicted, both on the monetary side and the fiscal side right now with the tariffs. If we get some sort of resolution with the tariffs where there's a truce on the trade conflict, and if the Fed stops tightening the screws, we could easily see 6 to 8% growth next year. And if that occurs, stock prices will have to reset higher. But if the Fed wants to keep tightening and we don't get a resolution on conflict, that it starts to impact capital spending plans for next year, we'll see revenue growth decline, and we'll see the earnings losses magnified. So that's where we're at. So it's really dependent on the policymakers.
So like scouts go out where we leave most of the troops behind, and you go out and find out what's going to happen out in where nobody else knows. Is that why you're the earnings scout, Nick?
Well, we're measuring the earnings and ranking them more
before anybody else
than anyone.
Let me ask you. Yeah. Okay, good. So then maybe you can, if everybody else stays at 8%, waiting for companies, maybe you can help us then. So if we did go to zero, not only would the multiple, even if the multiple didn't change, that's probably down 8% or whatever, or would indicate 8% lower equity prices. But you don't command as high a multiple if you have no growth, do you? I mean, the 8%. So the multiple would come down, and the E would come down. So that's like a double whammy. Where should the S&P be if we're at zero?
Well, Joe, so what it is, on a rate of change basis, the S&P 500 profit expectations have been weakening for about 12 months now. And when we find on a rate of change basis, when the expectations weaken, the multiple contracts. That's why we're seeing multiple contraction right now. And the PE multiple is only 13.7, so it's cheap. And it's cheap for a reason, because the expected earnings are getting weaker. What we need to see is some sort of resolution on the trade, a Fed pause, to see some stabilization in those expectations. And they're turning south for sure at an increasing rate. So if we see stabilization on the expected earnings, you'll see the multiple on the market start to expand again if we see improvement in the earnings expectations.
You're kind of highlighting one of the issues we've been sort of grousing about all day. So if the Fed sees that earnings aren't falling, then they continue to raise. It's just weird. It's like if things continue to go well, they don't pause. It's only if things don't go well, then they pause. So it's almost self-defeating. How do you satisfy that?
If you're looking at the current quarter, so the current quarter, fourth quarter earnings, if the Fed's just looking at that, the expected growth in the fourth quarter is 11%. That's going to be more like 15%. But that's not relevant for the market. You need to look forward to 2019, so hopefully looking at that. And
you think the Fed should pause? Is that what you're saying, Nick? You think that they should pause now? You think they're at neutral already or not?
I think they should have paused in December. I think the screw was tightened enough, and they did it one more turn. And if they're thinking 2 or 3 more turns on the economy, they could potentially strip the screws and break the economy. And if I was the Fed chairperson and I wanted to break the economy, I'd keep hiking.